The company reporting results this morning that showed higher than expected subscriber growth, though some analysts noting customer churn and average revenue per user showing signs of strain. Hey, John, it's great to have you back with us.
Good to be with you,
the story.
Thanks for having me on.
You're welcome. It's like a simple story. The data from the quarter is very clear. There was an element of promotion and marketing and deals that drove it. But how would you summarize it?
Look, we had really strong growth, as you indicated, and we're really comfortable with our growth. As I think you're probably aware, we've been focusing on customers that want to buy both wireless and broadband from us. And when we can do that, even if it's promotional, that's a good customer to pick up because they have great lifetime values, and over time they'll churn less and they'll address that very issue that you alluded to, which is the increasing churn in the industry. And we kind of anticipate as we acquire these customers, we're going to see a little bit of ARPU pressure, partly because we obviously give them a better price for their loyalty. And over time, we move them up on the continuum of services we sell. So, excuse me, by and large, we feel really good about it.
John, I don't know if you have some water there with you. Let me give you a second just to take a quick drink if you need it. Of course, in the quarter, and we've discussed this with a number of the carriers, it was iPhone 17. I was there at Cupertino Apple Park on the day of its release. Can you give us a real-term sense, even if it's from the promotion perspective, of how big a factor the iPhone 17 was for you?
Well, I think it's not a huge factor, but clearly there was a little bit of suppressed activity after the last iPhone cycle a year ago. Maybe some folks anticipated it was going to be a little bit larger. Customers were seeing if it was really frame breaking and change and concluded possibly that it wasn't and delayed waiting for the next cycle. And I think, you can only suppress that activity for so long. And now the new device comes out, people see what it is. So there has been an increase over last year and maybe some other previous years. It's not a record-breaking cycle, but it's strong. And we're seeing that as a result. But I don't think it's anything dramatically out of pattern given the suppression we've seen in the market. And we were very effective at working through it. Over 400,000 postpaid phone net adds. Right. Shows we can compete in that space and do well with it.
If you're joining us on Bloomberg Television and Radio, we're speaking to AT&T CEO John Stankey. Final on the iPhone 17, will it be more of a factor in the 3-month period that ends in December, the holidays?
Well, the holiday season moving through the fourth quarter is always a peak season for everybody in the industry. I expect that's going to continue to be the case this year. I don't see anything, what we've had over the first couple of weeks of the introduction, to suggest we're going to see a step function change from current rate and pace. So all of our forward guidance that we've given expects that it's going to be competitive, that we're going to compete and continue to earn our fair share of service revenues on those converged customers I talked about. And I expect that it'll be as rambunctious in the industry as it has been, and we'll do just fine.
John, if I turn on my television and watch a show that has ads, or I scroll on any given social media timeline, I keep seeing AT&T talking about itself as a home internet provider. I know that's been a priority. Have you any evidence that push has been a success and that you have positioned AT&T in that domain?
Well, I'm glad you're seeing those. It means we must be getting our right market and targets out there. And I think this quarter was an excellent example of it. We had our best broadband gain on our strategic products and services, fixed wireless and fiber, than we've had in 8 years. And so over 550,000 ads on those strategic products and a net gain of over 230,000 of broadband total. It's the best we've done in 8 years. I think that's a good, strong indication that it's working, especially when you consider the industry has been rife with examples of our competitors adjusting their offers, trying to do different things to stem the momentum we've had. So I feel really good about where we're going on that front, and to the effect we can add that with wireless subscribers, which we're showing that we can do over 50% of the time when somebody buys our fixed wireless product, and we're over 41% penetrated on our fiber base. That's a winning combination economically, and what kind of differentiates us from everybody else in the industry.
Okay, shares are down a touch more than 1%, which in the grand scheme of today is modest as a decline. The back and forth you had with the analysts was, yes, churn is up and ARPUs are down, but you seem not to be concerned about that. Why? Why is that not the metrics by which we should look to progress?
Yeah, part of it, I think, Ed, as well, is we've got a little bit of churn going on in the industry from CEO changeouts, and there's a little uncertainty around what the competitive posture is going to be. And then you look at the data points you just referenced, and we're the first to report, and people are asking, what's going to happen when we hear from everybody else? And my answer to your question is, we're going to talk about the fact that we're focused on putting customers together with wireless and broadband. And part of that dynamic is go penetrate segments that we've not been successful at penetrating or as successful. So when we go to value segments that we're maybe a little undershared in, you're going to naturally have a little bit less ARPU, or average revenue per user, when you pick that customer up. And when you combine wireless and broadband together, you may be giving initially a little bit better deal to do that. But that's designed into the plan. We want to grow in aggregate service revenues, which we've demonstrated that we can do that. We indicated we're going to see some strengthening of that as we move through the year from where we were this quarter. And I'm okay with a little bit lower ARPU if we actually execute on this consolidated customer strategy and are more successful at penetrating some of these segments that we haven't been as active in.